It's a historic day here on Wall Street. The Dow Jones Industrial Average topped 20,000 for the first time. We're seeing a mixed trading action outside of the equity markets. So joining me now is Tim Anderson of TJM Investments. Tim, great to have you here today.
It's great to talk to you.
Well, straight out of the gate this morning, the Dow Industrials broke above that 20,000 level. Now, yesterday we saw record highs for the Nasdaq and S&P 500. But given that it's earnings season and valuation is being called into question, what do you make of today's rally?
Well, it certainly seems like the early indication is it's going to hold. I mean, yesterday it felt like if we'd have been open for another hour, we probably would have gone through a 20,000 yesterday. But the rally it seems to be very broad based. There's clearly some issues in a few sectors like retail, and there's clearly some profit taking in some, maybe some of the steel stocks and some of the stocks that had really outsized gains in last year or the second half of last year. But there's a lot of interest now in oil and infrastructure with the news on the pipelines yesterday. And also the transportation index has really caught fire in the last couple of days. Not quite at an all-time high, but very strong gains yesterday and today.
And Tim, you brought up a lot of important points there as we're paying attention to what kinds of executive orders are signed in D.C. Here on Wall Street, we're seeing mixed trading action for oil, the dollar, and gold. Now, given that we're seeing gold break below that 1,200 level, fundamentally, what are you watching for the precious metal?
Well, 1220 has been a key level for gold, both on the way down last year. 1220 was support for a few weeks. It broke, and then it went down into the mid 1100 range. And earlier this month, it bumped up against 1220 a few times, and that's been serving as resistance. And you can see pretty clearly on the chart that that's the first real resistance level that's challenging gold into going, having a further move higher. Now, I think the one, if gold were to really catch a rally, I think the one catalyst you might look for later in the year would be the elections in Europe. You've got Dutch elections in less than 2 months. You've got the first round of the French elections in late April, followed by the final round only 2 weeks later. And if those go hard nationalists, and gain traction on the anti-EU movement, I would think that would be one thing that would be a catalyst to get gold to make a meaningful move higher.
And Tim, since you mentioned the euro, I do want to bring our focus on back to the U.S. and central banks.
Sure.
Now, we're not quite sure how these policies will be implemented with the new administration and what that means for the broader market as well as the economy. But what do you think the Fed is thinking right now?
Well, I think the Fed is probably going to have to reassess their economic projections, their GDP outlook for the second half of this year. And for 2018, the Fed is very, very, very long-term looking when they make these projections. And at their most recent statements, even a month ago, they said they had not worked in anything on Trump economic policies for their projections so far. I think they're going to have to do that because clearly his proposals so far are very, very pro-growth oriented. There seems to be a very strong push on pro-growth and pro-jobs agenda. And the Fed's eventually going to have to work that into their model and probably bump their GDP forecast for the second half of this year in 2018.
Okay, Tim, well, that was a lot to touch on. So thank you so much for joining me today, and thanks for your insight as always.
Oh, thank you very much.